Hello, everyone. Thanks for joining this podcast that is dedicated to transfer agent services in the Lux fund industry. I am Maria Karekla, Director in Arendt Investor Services, and I have with me today, we will start with Ngoc Lu-Rochow, partner at Pandoo, specializing in business integration, and Giovanni Serricchio, investor onboarding supervisor in PPH. Ngoc, if I need to start with you, can we place the scenery so the young professionals in transfer agency understands the content? What is a fund? And how a transfer agent plays a role in this fund circle?
Yeah, absolutely. I think when we all started in the fund industry, because I came here right after university, I had no idea what a fund was. So I'd like to explain it in a very simple way. I'd like to compare a fund like as a piece of cake. So you just want a portion of the cake, but you yourself, you don't want to determine what cake you want to bake. You don't want to go out and buy all the different ingredients, and you don't want to put all the effort to actually produce it. And I'd like to benefit from there's something already ready to go for me. I just need to select. And that's why I think it's always a nice picture of comparing it to a cake. It could be anything, but yeah. So what do you need for the cake? Obviously, you need somebody that has the idea what cake of you want to produce. So these are the different funds. You can go into a real estate fund, a private equity, venture capital. And you don't want to go out to the market and invest these products yourself. Obviously, you need quite a big budget to do that, but you just have enough money to get a portion of it. And then also, as an investor, if I have the money I want to invest it, you want to spread it a little bit. You don't want to just eat a marble cake. You'd like to have a piece of all different sorts of cakes. So the investment manager is within the fund circle. There are a lot of parties involved in it. So starting with the fund manager, investment manager who's selecting the product, buying the ingredients, buying the assets. You need obviously somebody in the kitchen that produces it, and is the backbone of it, the back office. So you need the so-called fund administrator. So this is the piece where we are focusing on today, and out of that we are extracting the transfer agent. Then obviously you need somebody, once you have bought the cake, your portion, you'd be interested to find out what's it worth. So you need somebody to calculate your portion, and you are interested to know, is it going up, is it going down, am I lucky and I can benefit from it, what I've invested. So this is on that side within the fund administrator, the accountants that do the calculation on a frequent basis. Then you have the auditors in the fund industry. They look that the people do their job properly. They're like the police. And then on top of that, you plug in the regulator that sets the rules. Everybody has to play with. Who else is in the industry? You need somebody that checks that whatever is board and is part of the fund within the portfolio, that it just exists, so the ownership of it. So you have the depository. So there's a lot of players within the market where everybody plays a proper role.
So, chef, in this recipe, where transfer agent comes in, what is the role of transfer agent for the fund to be up and running?
So I think the transfer agency has a very key role, and because they are the ones that are in touch with the investors. So the ones that actually bring in the money. No investors, no fund. I mean, you can set up a fund, but if it doesn't fly because it's not very attractive to the investors, you can't attract any money in there, and then it's going to be a very sad product at the end of the day. So we've seen funds being launched, but it couldn't get attractive, especially during the period after COVID, where the whole real estate market was a bit on hold. That funds were launched and eventually have been liquidated again because it wasn't a very sexy product for them. So the TA, what do? The TA has a lot of functions. First of all, it's split between two sections. You've got the AML KYC part, the TA, the investor onboarding. This is Giovanna's going to go into more detail. And then you have got the transactional piece. So obviously you need somebody that is taking care of all the actions that happen within that cycle once you subscribe into the fund.
So simply put, if we can say like the rest of the players in the fund, the rest of the ingredients, they are most in touch with the subject matter, with the investments or with the money. The transfer agent is mostly with the human, not the human data, the ones that they are bringing the money with the investors. Yeah, they are the first communicators. They need to communicate with the investors, exchange any communication, and they need to accept the investors in the fund.
Correct. Well, they don't. Yeah, they will give you the green light. They do their homework because, first of all, if, let's say, you want to subscribe into a fund, we need to find out, first of all, are you real? Do you exist? And then secondly, it was always very important, and everybody's talking about, is the money that you bring in, is it clean? Like, is the money that you have earned or contribute to the fund, is it earned out of, clean business? So if it comes out all of a sudden and it comes, I don't know, drug trafficking, this is not what we want. Or what else do you have? I mean, Giovanni, you usually have all these different scenarios where you think the money is not...
We can a lot of dodgy examples of human trafficking, drug trafficking.
So it's money laundering, let's say. What is this money laundering, Giovanni? What is this? And why Europe and the European countries, they're so combating this money laundering. So they set up some rules and they're setting some terminologies like the so-called AML and KYC, which stands, I guess, from anti-money laundering. And what is this due diligence? Please give us the flavor of this terminology and why the transfer agent needs to be aware of this.
So I would like to start saying that the investor onboarding team is a part of a transfer agency, is a little part of big puzzle. The role is essential that we are the first line of defense. We ensure that the investor that wants to invest in the funds are legitimate and no illicit money will go into the financial system. So we are essentially the gatekeepers. Understanding the terms, it's really, really important because you will hear AML, KYC, due diligence all the time when you are an investor, when you want to invest, or if you are a professional doing this job. So what does KYC stand for? KYC simply means know your customer or know your client. And it's the first and most direct step in the process. It's fundamentally identify and verify the identity of the investor they want to open the account. AML, what is AML? AML stands for anti-money laundering. And this is a broader framework of laws and regulation that they are designed to combat the criminals, to prevent criminals from disguising their illicit funds as real and put into the financial system. Last but not least, due diligence checks. What are the due diligence checks? It's the checks that we are doing every day. The term of due diligence simply means that we have to undertake reasonable steps to investigate and verify the information that the investor gives to us. We have to assess the profile of the investor, if it poses a higher risk or a lower risk, through collecting all the documents that investor gives us, analyzing these documents, make sure that they are legitimate, and at the end, make sure that the investor is legitimate.
So if I can highlight what you just said, you said like the TA is the gatekeeper for the fund and the members of the board. So their actual role is to be there to support the investors, but for the best interest of the fund. And to do so, they need to make sure that the fund is as clean as possible. So to eliminate any dirty money coming through. And by doing so, they need to be evidenced by the documentation that the investors needs to provide. And the rules to abide by is coming from the anti-money laundering and due diligence checks, which are captured, I guess, from regulations and practices.
This is absolutely correct.
So let's say you're like, you want to invest into the fund and you're an individual. So how do you identify yourself? The easiest and like the closest document, and everybody's going to ask for it, is your identification card or passport. And this is to start with. And then we're going to put your name on the screening tool and check whether your name pops up somewhere in one of the sanctions list, or whether you're related to any negative news. And then we will check whether all these things, should there anything be popping up, whether it's material or not. And then at the end of the day, after the whole process, where an individual is typically very simple and easy, Giovanni, I think that's the quickest you can do, we classify you as fine, and then you're good to go. You can send in your subscription agreement and get accepted at a specific day into the fund.
And if not, we can identify the red flags to bring to the attention to the board.
Absolutely, yeah. And if they're material or not, so that is assessed at a certain point. And then the TA asks you at a certain point to pay in the cash. They do the record keeping, they process the subscription, and if the fund allows the redemptions. And then obviously as an investor, you're super interested to find out how your fund is performing. And then usually if you pay something in, you would like to get a return. So you expect to get some distributions out. So everything is done and dealt with by the TA. They communicate directly with the investor, and it's very key to keep all the data that they're receiving highly confidential, because these are all personal data. So within the different departments that are part of the cycle, TA is always separate from the other departments, especially the data as well, because you're dealing here with confidential data.
Yeah, very sensitive information.
Yeah. And one more role of the TA, it's to keep the transparency and the trust of the investors between the funds. So the usual communication and the more transparent communication between the investors and the fund, it creates more trust for more investors to come in and more money to be invested in.
I think the TA is only the longer arm of the fund managers, because this is a function that will be delegated and it can be dealt in-house. But the majority of the fund managers, they prefer to, obviously you need a special license for that to perform that job as well. But the fund managers prefer to focus on their core business and then hand over the back office function to, let's say, bigger fund admins.
Which have more bigger structure, more people, and they can perform the function better. because it's complicated for a fund manager to establish all the entire structure of the TA. It's easy to give the service to someone who performs all the checks and all the operational tasks on your behalf.
Yeah, you have the right infrastructure, like maybe on the technical side, you've got the systems and all of that. And so that's why you have all the service providers on the market to service.
And also the experience.
Yeah.
Because I understand it's not just collecting the document, it's analyzing.
Absolutely.
It entails a critical thinking on the documentation and to assess, analyze, and come into some findings and some results through this documentation. And this is only can be done by critical thinking through the transfer agent specialist and experience departments.
Because you basically, at the end of the process, when you collect all the documents, you analyze the data, you take a decision. You are the first one who can say yes or no. For me, it's okay. For me, it's not. And if it's if it's okay, why it's okay? No red flags. There are nothing suspicious. Or if it's no, why it's not okay? And then you have to present your case to the MLRO or the management for their final decision.
Well evidenced?
Well evidence all the time. If it's not evidence, it's not done.
Okay, so if we say, Giovanni, that one of the main tasks of a transfer agent is the onboarding of investors, what actually onboarding of investors entails? And if I need to be more broader, the investors, what local or EU regulations need to be in compliance with? Can you walk us through, please?
Of course. Practically speaking, I will try to do my best. Practically speaking, onboarding an investor is collecting and analyze a various range of documents, depending on the investor type, whether they are individuals, corporate, trust, or even more complex structures. And through this document, we need to verify the identity, we understand their ownership structure, and we assess their source of funds, which is a very important thing to do if we want.
If I need to really distinct this source of funds, if I'm aware there is two different type of source of funds and source of wealth, can you please give us an example or explain what is the difference between a source of fund and source of wealth, please?
Well, source of fund, it's easy. It's basically the question that you ask to someone, where are your money coming from? I mean, what is your job? Let's take, for example, you, Maria. You want to invest 5 million in a fund. Where are your money coming from? Because as far as I understand, you are not millionaire. You didn't inherit anything. You didn't win the lottery yet. So where are your money coming from? Is it only from your job? Well, if it's like this, yes, I would like to do your job as well. So that's basically source of fund. It's asking the simple question, where are your money coming from? Now, if we talk about source of wealth, the question is more or less the same, but different at the same time. We ask, how rich are you? How did you accumulate all the money for the investment in your entire life? Because maybe you didn't do this job for all your life, or maybe you had an inheritance in the past, or maybe it's all the investment that you are dismissing and you get your returns from. So understanding the source of funds, it's asking the question, where are your money? Where are the money for the investment coming from? Understanding the source of wealth is understanding the overall reach, the overall money, the overall wealth of a person or a company who wants to make the investment.
Thank you so much for the distinction, Giovanni, because I think this is something that is most misconcept between source of funds and source of wealth. But I understand the onboarding is not just a document collection exercise. What else does the onboarding entail?
Of course, it's not only a document collection exercise. We do other tasks, we perform other tasks while onboarding investor. And this means also screen the investors through the sanction list, the adverse media checks, and we apply a risk-based approach to understand if what risk the investors pose, if it's a high-risk investor or if it can be considered a medium risk or it's a low-risk investor.
What does these different categories of risk approach profiles means for a transfer agent? What does a high-risk investor actually means?
High-risk investor means that we have to collect more and more documents to make sure that the investor is legitimate and the funds he brings into the system are legitimate as well. We classify, at the onboarding stage, we classify the investor with a risk appetite, let's say. We classify the investor in low risk, medium risk, and high risk, depending on their structure. If are complex structure corporates of trust, like I was saying before, the investor will be, and based offshore, the investor will be 100% high risk. This means that in verifying their identity and in collecting all the documents that we need for the investor to be able to invest and for his profile to be open, for his account to be open, we need to collect even more documents. And we need to make sure that our assessment is done in a proper way and that we understand all the investor structure, all his ownership structure, and as I was saying before, the source of funds and the source of wealth.
In-depth of understanding of a high-risk profile, it's crucial. And this is because, I guess, we have regulations and that they force us for a depth understanding of where the funds are coming. What are the regulations that we need to be aware of?
Well, I would not go into deep. I will stay on the basic. I would start to say that in Luxembourg the regulation is very robust. There are a lot of regulation that we have to follow, but the most important is coming from the CSSF. CSSF, it's an authority, it's the Luxembourg Regulatory Authority. CSSF stands for Commission de Surveillance du Secteur Financier. Pardon for my French. And it's, as I was saying before, the Luxembourg regulator. It's an entity that gives the directives and the regulation to the financial institution on how to perform their jobs, basically. The most important regulation that we have to take into consideration when we speak about onboarding, it's the 1202. Through this regulation, the CSSF details which are the AML CFT obligation for the professional in the financial sector and for the transfer agencies as well. At the European level, we have to comply with the 5th and the 6th AML directive. The 5th focus more on transparency around beneficial ownership, and while the 6th is more focusing on introducing an harmonized list of predicate offenses for the money laundering. Also, we don't have to forget the GDPR, which is really important as well, the data privacy. Through this, we ensure that the data is processed lawfully, transparently, and securely.
So would you say that the 5th and 6th directive of AML should be a Bible of those that they're in the transfer agency service, or there is more? It's more complex than I understand it.
No, you are right, Maria. It's the Bible. Along with the 1202 regulation of the CSSF, this is the Bible. I mean, someone who wants to do this job or is approaching to this job, this is the basis where to start. If you read this regulation, you will have a very good overview on all the panorama of the investor onboarding.
So in the process of collecting a range of documents between the different type of investors, if we can summarize a list of documents that an investor preliminary or minimum needs to provide to the transfer agent, what would that documentation be?
Well, we need to start saying that the documents required will vary depending on the investor type. If it's an individual, if it's a corporate, the documents that we ask are always different. Let's start from the simple. An individual, what documents we ask for an individual investor? First of all, an ID, a copy of his passport or a governmental entity issued document. We verify his source of his residence, where is he from, through a utility bill, a copy of his utility bill. And last but not least, we verify the source of wealth and source of funds. So, as before, where is your money coming from? And these, more or less, are the documents needed for an individual. When we talk about corporate, we may need to ask more documents. We need, for sure, the corporate constitutional documents, such as the Articles of Association or an extract from the company register. Then we have to identify the directors of the company, so we may need the register of directors. We need the authorized signatory list, so we need to see who are the people who can legally bind the company when investing. And we need also the ultimate beneficial owner declaration. This is a very important document because in this document is written who are the persons that benefit and ultimately control 25% of or more of the money of the company.
So, Giovanni, I understand that the purpose behind this list of documentation is like to establish that the investors are, first of all, real, they exist. So we want to see if actually they have the proper documentation to identify who they are, if they exist, and I guess if they exist in the current, in the present time. So I guess all of this documentation needs to be either verified or be up to date of updated, just to make us give us the comfort that they're actually in action to act at the moment.
Exactly. We need to make sure that the investors are legitimate. And the document cannot be old, but let's make an example.
Please.
They may have a trust that it was established in the 50s. So I have a trust deed that is dated 1955. I mean, this document is too old. How do I make sure that this document is really legitimate and there have been no updates, there are no subsequent trust deed updates? Another thing that comes into force in this instance is the certification. Sometimes we ask for documents that needs to be certified by a professional, like a lawyer or a notary in Luxembourg. This professional sees the document with his eyes and put a stamp and a signature that the document is original as he saw it. So through this stamp, through the certification of the professional, we make sure that the document is original and we make sure that the document exists. And it's authentic. And it's authentic. And we make sure that also the investor is authentic. It's not pretending to be.
So, Giovanni, with all of this we just mentioned, can it be provocative? Where is the drama in the onboarding of investor? Is there any drama in this process? Is it blood-free, this process, or there are any red flags that a transfer agent needs to be aware, identify, assess, and deal with?
I can say that there is drama, and there is drama almost every day. And I want to say, luckily there is drama. Because otherwise this job would not be as interesting as it is. If you have only clean investors, which gives you clean documents, and you just do your job all the time with the same investor and the same documents, it becomes boring. It becomes very interesting when there are red flags. And there are a lot of red flags that we need to consider when onboarding an investor. And this is something that we see every day in this industry. First of all, one of the most common red flags will be the lack of transparency in ownership structures. Everybody knows the Chinese boxes. So, company that is owned by another company, that in return it's owned by another company, and they are all based offshore. These are all offshore companies, and you are not able to understand who the money for the investment belongs to, who are the ultimate beneficial owners, if there are some ultimate beneficial owners. And this is a serious red flag that needs to take into consideration.
How do we combat this? And Ngoc, please come if you have any example in mind. But to identify and go to the actual ultimate beneficial owner, what are the main ways we can combat this and reach the desirable result?
You remember before when I was telling you about collecting documents for one company because it's one company wants to invest? Let's make the example of these Chinese boxes, no?
Yes.
There are multiple ownership layers on this company. So we have to collect all the documents pertaining to each single company to arrive to the point to understand who is the ultimate beneficial owner.
And there is a connection between one layer to the other, right?
Exactly. All the layers are connected because all the companies are owned in turn by the other before. So it's like a ladder with steps. We need to identify each step is a company. There are 12 steps on the ladder. Let's pretend there are 12 steps on the ladder. We have to collect all the documents for each of the 12 companies until we arrive to the point where we understand who is behind this company and where their money coming from.
But it's per se not something bad to have a complex structure. It just raises more questions. Why was it set up this way, I believe, isn't it?
Absolutely. They are legitimate structures. And most of the time they are legitimate structures. And they are set up just to for tax favor purposes, which is not illegal. Having a tax relief or offshore company, it's okay. It's perfectly legal. We just need to undertake more steps.
As long as they serve the economic purpose of the structure and the ladder, as you mentioned, it's perfectly legitimate and the transfer agent can tick the box. But it needs documentation.
Exactly.
Perfect.
Do you sometimes have the case when, investors refuse to hand out documents because they don't understand why you're asking for those?
We do have the cases. We do have cases like this almost every day because the investor, it's a normal person like us. They don't know what is KYC, they don't know what is AML, they don't know which documents they have to provide, they don't know what are we asking, what are these complicated words that we use when we ask documents. So we have to put ourselves on their side as well, in their shoes, and we have to imagine that we don't deal with this every day. The investors, they don't deal with this every day. So when requesting the documents, we try to be as clear as possible. And if investor refuses to provide documents, we try to explain calmly and simply to him what is our purpose, what is our scope, and what is our aim, what we want to do at the end, eventually.
And if there is an actual resistance, which can be another red flag from the investor, like if there is any suspicion behind anything, how a transfer agent can deal with this?
This, if there is a reluctancy to provide KYC information and to provide documents that we need to obtain to complete the onboarding, this can be a red flag. Because when the investor is not willing to provide simple documents like constitutive documents or the authorized signatory list, this can trigger an alarm in your mind that makes you think, maybe there is something wrong behind this. Maybe the investor understands what we want, but he doesn't want to provide because he has something to hide behind this structure. And the reluctance and resistance to provide this documentation can be also a serious red flag.
And how can we deal with this? Do we stop immediately the onboarding? The procedure comes to an end? Are we trying in different ways? Are there any other ways through the regulation that we can deal with this?
We are stubborn. We never stop. We go through the end. We go to the end. We make sure that we have all the documentation. We do everything to make sure that we have all the documentation. If investor doesn't want, sometimes picking up the phone and talk to him, it's simple. Maybe he will understand better what we need and why we need it. In case the reluctancy is prolonged during the time, and you really understand that there will be no way to obtain this document, even after you told the investor that we do it because we are obliged by this and that regulation in Luxembourg or in Europe, then yes, we stop the process. We do not continue with the onboarding. I mean, our job is not to onboard everyone indistinctly. We need to make sure that they are legitimate investors.
But I guess all of these results and findings, it needs to go to the members of the board. We need to provide the facts. What are the documents that we received and the analysis? So the transfer agent is there to present the results and findings to the members of the board, and that the members of the board, they are the ultimate governing body to make a decision either to suspend, either to partially on board with some caveats the investors, or fully accept the investors and start the investment process.
Exactly. There are some instances where the documents provided are maybe not enough or are different from what we were asking. This doesn't block the investor for being onboarded. Yes, it doesn't stop our process. It just means that we need to undertake another step. We have to clear the red flag. How do we clear this red flag? We go to our compliance team that analyze the situation, give us guidance if we need to ask more documents or it's okay like this. And then we ask the approval of the senior management team, which undertakes the last decision if the documentation and the investor can enter into the fund and can freely invest. All the onboarding stops there because of the lack of documentation.
Is there like a red flag to see in an investor where you stop your onboarding straight away? Let's say it comes from a very weird, not weird, but jurisdiction where you say this is a no-go. Or, I don't know, like different scenarios where first you see it straight away, you say, okay, that's it, done.
Or resource of funds.
There are also some jurisdictions that are completely forbidden to deal with. Let's imagine North Korea. North Korea, nobody will deal with that. So if I see an investor coming from North Korea, for me it's a no-go at the beginning. We don't even go to compliance, we don't even go to management to ask for approval. We just stop the onboarding at the very beginning. Or let's make another example. An investor that provides a forged document, like passport, a forged passport. The onboard stops there. We don't even continue. And we may need to communicate this to the CSSF or the Financial Intelligence Unit it's an authority also really important in Luxembourg.
So there are authorities to prevent and to protect the transfer agent in terms of any red flags. But I understand that there are rules, and we can even color the word map. So there are countries like classified as red, as no-go. And where can we find how can a transfer agent be aware of these countries?
Well, it's simple, because there is the list that is made by the Financial Action Task Force, and it's updated every year with the list of third countries that are red flag, which are just high risk, or which are no-go. and and it's really interesting to see this list because it's updated every year, and it's interesting to see that a lot of countries put a lot of effort to upgrade, implement their AML programs in the country, and they are promoted to be outside the red flag list, outside the high risk list, and so this means that more countries will want to deal with them, will want to make affair with them, and they will bring more money into the country. So have a robust and healthy AML CFT system in a country means having more money for that country.
Very nice to hear this this list. If I need to get you to another terminology that we really need to see, we all heard of this PEP, of these political exposed people. Can you please let us know, is this a red flag? Is this a high risk? Or is it something that we don't need to be feared of, but only deal with some different ways?
Being a PEP per se, so a politically exposed person, meaning someone occupies a role as a head of government, head of state, a minister, it's not per se illegal. It constitutes a red flag. But it doesn't mean that we have to stop the onboarding. The PEP can be onboarded. We just need to make sure that we perform an in-ace due diligence. So there will be more document asked. And there will be needed for the management approval for this investor to be able to invest. Being a PEP per se, again, it's not illegal. You will find a lot of PEP when you operate as a transfer agent. And all of them are okay. They are fine. I personally never had the case when we stopped the onboarding for a PEP.
So why is this sensitivity, if I say, on the political exposed people?
It's just because they are more exposed to corruption. Being in a prominent public function puts you in a place where you are exposed to corruption. And especially in some countries, these people, the PEP, can be more inclined to accept this corruption. That's why we have to be more thorough in our due diligence and collect more documents during this onboarding.
Just to eliminate the risk of corrupting actions from their side.
To eliminate the risk that if this PEP is corrupted and he accepts illicit money from someone, he brings this money into the financial system and corrupts also the financial system. So we need to make sure that the money that the PEP has are clean, are coming from a legitimate source.
So again, the funding sources you're putting this as a red flag. The suspicious funding sources is also a red flag on its own. Is that correct?
Is it correct? This is also another major red flags. Unclear or suspicious funding sources are always a major red flags. And the information that we should obtain includes also, as I was saying before, the sale of property, bank loan, bank statements, all these kind of documents we need to collect and make sure that they are legitimate, and the money described in this, the flow of money described in these documents are legitimate.
And have a clear path how they ended up in an investor's hands.
Exactly.
Any other red flags, if we need to summarize this? Any last red flags that you can bring up to this conversation today, Giovanni?
Well, for sure, when we were talking about PEPs, when we deal with PEPs, we screen all the investors' name through the major sanction list and all the other lists that we are required to screen the investors into. And this also brings up negative media or adverse media information comes into my mind that can be a red flag if investor or a single person is associated with involvement in legal cases or financial crime or sanction breaches. This is a red flag. And another red flag that comes into my mind is the investor having showing an urgency to complete the onboarding. The investor is in a hurry, and usually when you onboard an entity or a corporate or an individual, they don't reply to you in real time when you ask documents. They still take their time, 1 day, 2 days, 3 days, depends. But when you have the investor that after sending an email, he replies straight away, and he put pressure on you to finish the onboarding as soon as possible because he has to invest, because he has to make a lot of money. This can raise a red flag. This can be a red flag because putting pressure on a professional working on such delicate matters, it's not always the best. Because we need to take time in doing our job. We need to analyze the documents. We need to go through all the documents that we receive, and we need to carefully read everything.
Because under the pressure of the urgency, it may be the reason of shifting the attention of the transfer agent to other points just to tick the boxes, let's say.
Exactly.
Very well, very well. And finalizing the onboarding process. What is the corporate body or fund contributor responsible to final check the documentation and give the final go-ahead for the completion of the onboarding process? And can this be delegated? What is the role of the TA in this final step?
Well, we have to start saying that the ultimate responsibility for ensuring that the proper AML KYC checks are performed lies with the fund's governing body. This means the board of directors of the fund or the management company. In practice, this responsibility is always delegated because the MANCO or the board of directors are composed by not a lot of people. They are usually small companies, and they cannot undertake the investor onboarding for all the investors in a fund. That's why we are here. We are the transfer agency. We do the job in their place. While the delegation is allowed, it's also very important to highlight that the responsibility cannot be delegated. So the ultimate responsibility lies always with the board of directors of the fund or the management company. We do all that we take to onboard the investor, to communicate with them if in case there are some escalation, then or some special cases that need to be escalated to them. And the delegation, just to summarize the points, the delegation to the transfer agent is common for operational efficiency. The role of the transfer agency is to execute the onboarding, collect all the documents, make sure that the investors are legitimate and they can really invest into the fund. And very important is the collaboration between the transfer agency and the compliance team.
So just to sum up, if there is any issue with the onboarding of the investor, the responsibility lies to the governing body. However, the TA help, assist, and support the governing body to make the proper and supported decision by collecting and analyzing certain documentations along the process.
Exactly. And on this purpose, I want to bring another word on table, which is MLRO. It stands for Money Laundering Reporting Officer. The MLRO is the responsible of the governing body or the Manco management company for approving at the end all investors entering into the fund. When we have some cases which raises a red flag or high risk investors, we go to the MLRO of the fund and we ask him to approve all these investors with a high risk relationship.
Very well. So we have gone through the lengthy and time-consuming procedure of onboarding the investors. Now the investors are onboarded. The governing body gave the go-ahead. Now the investors needs to be subscribed in the fund. What actually subscription of investors means, and give us the practical aspect involved, please.
Well, the subscription process is basically the official acceptance of the investor in the fund, meaning that the investor can make the investment. He can put money to invest. After all the KYC and AML checks are completed and make sure that we have all the documentation and the investor is approved, the investors subscribe a subscription agreement, which indicates usually which always indicates how many units or share the investor wants to subscribe in the fund. And very important is the wiring of the money from the investor. So the investor needs to wire the money to the fund for the subscription. After the funds are confirmed, the transfer agency allocates the subscribed share or units to the investor in the fund register. Then there are issues on contract notes or statements to the investor to confirm the details of their subscription. Just to summarize all the process, after the due diligence is performed, all the checks are done, the investor is considered eligible to invest. The investor fill in the subscription agreement, indicates how many units or shares he wants into the fund. The investor is accepted into the fund. He wires the money. There is a cash reconciliation. Contract notes are issued. The investor is eligible to. The investor is an official investor into the fund.
And has the legal rights of an investor.
Exactly. He has the legal rights of an investor. He can be considered himself as an investor.
Can you give us, I don't know if there's any practical aspect. So now the investor, after it signs the subscription agreement, it can actually make the transfer of the money that he promised to invest in the fund or a part of it. Is there any initial commitment? Is there any final commitment? And how it works? So I am an investor, I'm in a corporation that I promise to invest in the fund 5 million euros. After I sign the subscription, or by the time I sign the subscription agreement, I need to transfer immediately the 5 million euros. Do I need to do it in arrears as per the business plan is going? How it works?
Well, signing the subscription agreement, it's legally binding. So if you promise a commitment of 5 million, 5 million will be, because it's a legal document. You take an obligation to the fund to subscribe for their share of unit and a total amount of 5 million. After the wire of money, it's not immediate. It can take up to 1 week to receive the money. It's okay. Then there are funds that are subject to monthly closing, so you need to be careful when you subscribe, and the wiring of money needs to happen in a certain deadline because the fund has monthly closure, meaning let's make an example, 31st day of each month the fund doesn't accept only that investor, the investor that subscribed for the previous month. So if you subscribe the 1st of September, you will be accepted by the 31st of September. And you will have an app calculation that it's different month by month.
I think it also depends on the fund type. So you have commitment-based funds, and the majority of the alternative investment funds are often closed-ended due to the type of assets. So at the start, when you sign a subscription document, you, as you mentioned before, you commit an amount. So Maria, you are interested in one fund and you like the asset class, and you promised to commit to the fund 5 million. The portfolio manager now knows at the closing date, this is the amount of money that I have. I'm looking out for an investment now. By the time he finds the proper investment, then proportionally you will be asked by the TA to pay in the cash so that they can realize the investment. So it depends really on the fund type. If we're talking about a different fund where right after subscription, the investor gets accepted, there are funds where you pay within a certain period of time. So you will be asked within a couple of days to pay in the cash straight away, full amount. And then there are these commitment-based funds where then you will be asked via a notification to pay in pro rata the amount.
And also there are funds where they don't have a fixed closing. They just need to reach a target. They say, we want to reach 500 millions from investors. So they stay open until they don't reach the 500 millions. So let's make the 5 million commitment from an investor can be paid in a very long time, not immediately.
But this is all based in the prospectus, in the constitutive documents of the fund. So we need to abide by the documents that they're binding the investors after their admission to the fund, which is called, as we just described, subscription.
Yeah, exactly. Because at the end of the day, we have to remember that the relationship is between the investor and the fund. The transfer agency is just an external party performing all these tasks and the onboarding. But the real relationship is between the investor and the fund. The legally binding agreements bind both of them, not the transfer agency.
Perfect. Thank you so much for this conversation.